morning, YouTube. I know I just made a video about the Tesla puts, but we have another banger to go over. It's going to be CLF puts here. We entered the CLF puts on December 27th, which is going to be right on this day, right? We got in at 50 cents. It was a pretty cheap play, you know. And then we sold for 110% at $1.05 per contract. Shout out to Akan here for believing in me so much. He already called it 100% right when I called it out. But let's go over the TA. I did briefly post it here. Anticipating daily 200 EMA reject / weekly 50 EMA rejection. And now let's look at the chart. Daily chart right here on CLF. Sorry, I don't know why it's zoomed back so much. December 27th, which was right on this day. Prior to that, we already had a small rejection from this 200 EMA, the red line, okay? So I was expecting another retest, and if there were any rejection confirmations, we were going to enter. And as you can see in the past, we have not been able to break above the 200 EMA for a very long time, right? And, you know, still, unless there's any fundamentals, like there weren't any good catalysts or anything. These companies tend to run really hard or drop really hard off a catalyst, especially steel or like oil, you know, airlines. But I didn't see any news or any catalyst online. So the probability for the TA playing out was pretty high. Now let's look at the weekly chart. 50 EMA, see this green line here? 50 EMA rejection. Again, we were trading below 50 EMA since June 2022, which is a while there. Right, so that was another rejection point there. Looking at the 4-hour chart also, huge bearish divergence. We have a high here, another high, but we have a high and a low. And this is the way I enter divergence plays. First, I draw like a vertical line here from where the divergence first starts, which is going to be right there, and where the divergence ends, which is going to be right here. And the lowest point within this two channel, once that lowest point breaks, that'll be my entry trigger. So as soon as this point was penetrated right here, we took an entry. This was actually one of the best entries I've ever taken throughout my trading career. I never really had to average. I never really had to wait through consolidation. It gave us a really, really nice breakdown literally the next day. We sold this out for 110% on the 28th, which is going to be, my apologies, right over here. So we took the entry at around 6 a.m. Hawaii time, which is going to be right over here, right after the rejection, right? We saw a pump, shooting star bearish candle, followed by a bearish engulfing candle. We had a small hammer candle there, but the volume here, as you can see, it was like twice the size of these candles when they were pumping, which means is that buying pressure is slowing down. And look what happened right after that. Very bearish candle right there, retest candle, and we flushed all the way down. Okay, and even when we're consolidating like this, I didn't see any type of significant buying throughout this consolidation after rejection. If we had enough buyers present, we would have pumped out of this accumulation, but we weren't able to do so. We may have seen some buying throughout the end of the day, but that's, every stock, institutions close out, hedge funds close out. It's normal for the volume to be significant right before market close. The main thing to note here was that the accumulation volume was really junk. I wasn't seeing much buyers step in. And next day, another confirmation. We opened flat, but as soon as the market opened, CLF tanked. And you see this candle right here, huge wick to the top, rejection, which is telling us that this prior trend here, prior uptrend, buyers tried to reclaim it, but we rejected. Hence the upper wick candle here, right? And right after that, we saw a small consolidation followed by huge bearish spike in volume right over here. Another thing I loved also looking at for confirmation is that after breaking the prior trend, if we see a consolidation with low buying volume, that means that the accumulation is already happened and distribution is happening. The orders are being distributed, and it's causing the stock to go lower, especially if when you're not seeing any buying pressure during these accumulation phases. That means that the reversal most likely won't happen. And again, look at the EMAs, all bearish, trading completely above all the candlesticks. And we close out the trade around 6:40 a.m., which is going to be right around here for 100% gains, easy money. Have a good holiday, guys. Be safe.